Historically, precious metals bull markets are led by gold. They're led by the fear buyer. And when the narrative gains popular currency among generalist investors, that commodity with a lower unit price, which is to say silver, begins to move further and faster. So I think silver speculators will need to watch the gold market. I think it's important, too, to note that in every currency other than the U.S. dollar, we're in a gold bull market. So I think that's important to understand.
Renowned investor RickRule from Rule Investment Media has raised concerns about the potential impact of a recession on the supply and demand for silver. While a recession could reduce production, it may dampen demand, posing challenges for the silver market. Despite recent media discussions about a soft landing for the U.S. economy, analysts have noted a persistent expectation of reduced odds of a recession over the past 6 weeks. Nonetheless, the silver market is projected to remain in a deficit for the fourth consecutive year. Market expectations of U.S. interest rate cuts and a stronger U.S. dollar could temporarily affect silver investment sentiment. Industrial demand for silver is experiencing rapid growth due to its reflective and conductive properties, particularly in sectors such as solar energy and germicidal applications in water treatment, sanitation, and medical fields. The global shift towards electric vehicles drives silver consumption, with the metal used in EV battery production and electrical components essential for these vehicles. Silver demand from the photovoltaic sector has notably surged, with a 15% increase last year and an expected 28% surge in 2022, according to data from the Silver Institute. RickRule acknowledges the challenges of accurately predicting silver market trends, citing the metal's interconnectedness with other markets such as copper, lead, and zinc. Despite this complexity, a recent physical silver market research report suggests a conservative price target of $30 for silver in 2024. However, this target was surprisingly low given the silver supply deficit, bullish secular silver chart, and silver's undervaluation relative to gold. Let's watch snippets from RickRule's interview, but before getting into the video, make sure to subscribe to our channel and give this video a thumbs up.
First of all, I'm delighted with the information from the Silver Institute, because neither Keith nor I have the resources to understand anything like the totality of the silver market. At the Silver Institute, they have a bunch of smart young researchers who do nothing else full-time. And the report, which I've studied in some detail, is an interesting read. It talks about the fact that there's a primary deficit for 2024 of approximately 1.2 billion ounces. It's important to note that the report doesn't attempt to categorize above-ground inventories for the simple reason that nobody knows. A whole bunch of silver constitutes private wealth, particularly in South Asia. When people hold private wealth to shield themselves from their government, they very seldom identify that private wealth to the government. So we don't know what the above-ground inventories are like. What we do know is that the low price for silver has made primary silver mining, that is to say silver produced from silver mines, uneconomic or marginally economic in most cases. Most silver, in fact, is produced as a byproduct of copper mines, lead mines, zinc mines, or gold mines. And it is true that a recession, which reduced copper, lead, and zinc production, would probably have a deleterious impact on silver production, but silver demand might fall too, which is to say, if you are concerned about a recession, be concerned about the silver price. It will be a mixed blessing. It will reduce supply. It might reduce demand. It is important, though, to note that the low silver price right now depresses the biggest source of silver production, which is recycling. For many industrial applications, at $24 or $25 silver, the value of the money recovered in recycling operations is not enough to justify the recycling. And the industrial uses of silver are growing very rapidly. Its reflective properties and conductive properties make it absolutely a necessary component of solar energy, hence the Chinese fascination with silver. But importantly, too, silver is a wonderful germicide, and there are very rapid increases in utilization in water and wastewater treatment, in sanitation, and in medical. Maybe the fastest growing application that we're seeing with regards to silver happens here. It's also important to note, though, that the quantum increases in silver price that we've seen occasionally in the past are really a function of investment and speculative demand. We've noted on your show before, Dunnigan, that historically precious metals bull markets are led by gold. They're led by the fear buyer. And when the narrative gains popular currency among generalist investors, that commodity with a lower unit price, which is to say silver, begins to move further and faster. So I think silver speculators will need to watch the gold market. I think it's important, too, to note that in every currency other than the U.S. dollar, we're in a gold bull market. So I think that's important to understand. I suspect that you are continuing to see leakage of physical silver inventories held by individuals, particularly in South Asia. India, Pakistan, Bangladesh, Sri Lanka. Those societies, a millennium-long fascination for silver, they have a need for a store of wealth outside their domestic currencies, which are inflated away. And the consequence of that is what the silver price does well in their own currency rather than in the U.S. dollar. They often dishoard that silver to use to meet household expenses and things like that. The silver market is devilishly tough to forecast, because you have to know an awful lot about a lot of things. You have to know a lot about copper markets and lead markets and zinc markets. You have to know about the economy of India. Things like a drought can actually impact silver supply as peasants dishoard their silver to feed their families. So it's important to note that even an organization like the Silver Institute, that has all of the resources which it can employ studying the silver market, can very often be wrong.
Silver has continued its upward momentum, surpassing the mid-$22 during the early European session on Monday. Traders are closely monitoring Tuesday's upcoming U.S. January Consumer Price Index data for potential market-moving developments. If the CPI data confirms a trend of declining inflation, it could bolster expectations for rate cuts, which may provide support for silver prices. Currently, silver is trading around $22.80, reflecting a gain of 0.82% on February 12th. Analysts are eyeing a potential bullish breakout above the upper boundary of the Bollinger Band at $22.85. If this breakout occurs, it could pave the way for a rally towards key psychological resistance levels and a high seen on January 25th at $23.00. Rick acknowledges the possibility of market manipulation in the silver market, highlighting tactics such as short-selling physical silver and artificially driving down prices. This strategy enables traders to maximize profits on leveraged futures positions. As such, market participants remain vigilant regarding potential manipulation tactics and their impact on silver prices. Let's watch RickRule's interview with Liberty and Finance.
Don't know about the extent that will happen, that could happen. You and I have talked before, Dunnigan, about the fact that futures markets and silver paper markets often trade 200 times in a day the amount of silver available for physical delivery. Mostly, these trades don't settle in physical. Mostly they're rolled over, and only the differences are settled in physical. You could have a situation where you had a seller default, and that would be a truly ugly thing. Now, don't think that you're going to get a short squeeze, a real short squeeze. What will happen is that the exchanges likely will shut down for a while, and they'll cash settle. But they'll cash settle if that happened at a price much higher than today's price. So what really bothers me is that you have a market where the sort of gross trade position is in the billions of ounces, and the physical silver available for settlement is in the 60 or 70 million ounce range. You have the possibility for a truly severe disruption given the extraordinary leverage in the silver market. And by the way, many of the things that silver bugs traditionally identify with silver price manipulation have to do precisely with this. I'm not a believer that there's a decade-long or 2-decade-long or 3-decade-long conspiracy to manipulate the price of silver. But I note that trade desks manipulate every market, including markets as broad as the euro and the US dollar. Manipulating the silver market, where you take a leveraged position, long or short, in the futures market, which is often levered 300 or 400 to 1 against the physical market, and then using borrowed physical silver to dump into the physical market at some point in time during a 24-hour period, where the trading volumes are fairly small. In other words, you maximize the amount of damage that you do to the physical market to maximize the leverage gain that you get in the futures market. I think that's been happening continually for about 20 years. The temptation to do it where you can sell, say, $50 million worth of silver, which you have to pay interest on, to move the silver market 5 or 6% down, and then have that 5 or 6% reflected in a futures market where you have a $500 million or $1 billion leveraged long position, means that you can, if you play your cards right, generate a 50% return on capital employed in a 2 or 3 week period. The temptation to do this is, of course, extraordinary, and the leveraged function of the futures market makes this fairly easy for deep-pocketed players, sophisticated players, to accomplish.
The price of silver reached the anticipated target of $23, but encountered strong resistance at that level. This resistance led to a bearish bias in the market, prompting a test of the EMA 50 as a support line, which is currently situated at $22.60. What could potentially trigger a bullish breakout for silver? Share your thoughts in the comment section. If you liked this video, please like, share, subscribe to our channel, and click the bell icon to be notified of future videos. We hope our content has helped you in your trading endeavors.